welcome back to another video, and in today's video I have a very quick update for you guys. There's been very recent FUD about FTX and Alameda research because of the FTT token and CZ's recent tweet about how they're planning on selling their FTT token as well. So without further ado, let's go in and dive in to see what's actually going on. So this research is just completely my opinion only. It may not be factual. I just, literally a few minutes ago, I learned about this, and I started reading some CoinDesk articles, looking at the total supply and market caps, etc. So we're gonna analyze pretty much together. So the thing is, right? So yesterday or the day before, CoinDesk releases a newsletter about saying that divisions in Sam Bankman-Fried, who's the CEO of FTX, saying that his looking into Alameda Research's balance sheet. So Alameda Research is basically another company, his trading company owned by Sam, the CEO of FTX, and that's where they do their investments, etc. I believe. So there's been some FUD about this. So it says that basically FTT, which is FTX's main token, and its initial use cases are getting fee discounts on the exchange, etc., like a normal exchange token. However, there has been some recent FUD saying that Alameda Research is holding basically their multi-billion-dollar company, and according to CoinDesk, let's just find it. So the company's assets amounted to $14.6 billion, and its single biggest asset apparently is $3.66 billion of unlocked FTT. So the third largest entry to assets, etc. Blah blah blah. So apparently, according to CoinDesk, Alameda Research has assets amounted to almost $15 billion, and basically a third of their assets are in unlocked FTT. So first of all, this is a red flag, kind of, because see, Alameda Research is a part of Sam's companies, and a third of their tokens belonging to a partner company, which are unlocked according to CoinDesk, is pretty. It's a huge red flag, because I don't think it's unlocked. I'm sure there has to be, in my opinion, there has to be some vestings on that, some rules on that. But it's still a red flag, because hypothetically they could sell large amounts. Or also do something else, which I'm going to show and dive into, which is actually very interesting too. So, by the way, this is the chart for FTT after CZ's tweet, which I'm also going to show. The price of the token went down to $21.50 from around $24.50. So, according to this article, so where were we? We had a third of the assets that the Alameda Research owns is unlocked FTT, and there are more FTX tokens among its $8 billion of liabilities, 292 million of locked FTT. The liabilities are dominated by $7.4 billion of loans. Okay, so what else did they say? It's very interesting. People are comparing the situation to Celsius, but from my understanding so far, it doesn't have a lot to do with Celsius. I mean, I read this article as well, which is a bit biased. I'm assuming, it's a bit biased, clearly, because it's basically saying that how Alameda Research has a lot of money in 2-3 other projects, and they turn out to be not performing well, and they're all tokens, and that they're applying this scheme, saying it's a flywheel scheme. So a company creates a token, pumps the token price, then marks the gains to their balance sheet, shows the gains to investors, and then raises cash through equity sales or loans. I mean, personally, because I have very little knowledge in this, and this is a lot of speculation, I mean, the understanding I have is that these articles are suggesting that due to the high FTT holdings and their potential to do a lot of marketing, they're showing these FTT holdings as gains to their balance sheet, because technically they are the ones who launch the token, and because the market cap will be so huge due to their ability to market, they can use this balance sheet to pitch to investors saying, oh, we have a huge market evaluation, blah, blah, blah. So they invest, they raise cash through equities or sales, and then again, the token price pumps furthermore. And it's like basically an infinite money glitch, if you look at it that way. But, I don't think this is the situation, but this is the speculation that's going on. And the main driver to this speculation is after this CoinDesk article was released, this one right here with, apparently they have this, balance sheet in their hand that reveals all of this information that Alameda has this. But, it's a bunch of speculation. We don't see what that thing that CoinDesk have is, which is not public information. But the thing that brought attention to this was now, just like 2 hours ago, CZ tweeted saying, as a part of Binance's exit from FTX equity last year, so they exited from FTX equity the previous year. They received around 2.1 billion USD equivalent in cash or in Binance USD and FTT token. And due to recent revelations that have come to light, we have decided to liquidate any remaining FTT on our books. So recent revelations, to public knowledge, the only recent revelations we have on FTX and FTT token is this article that was published. I believe it was 2 days ago. It was November 2nd, so actually a couple more. So today is the 6th. It was updated on the 3rd, so yeah, it was 3 days ago. So this is the perhaps they looked into this furthermore, and they found some more stuff. I mean, it is just a bunch of speculation, and of course now they're saying that they want to sell their tokens in a way that they don't want to hurt the market price. If you continue reading the thread, and the CEO of Alameda Research even posted a tweet saying that, hey CZ, if you're looking to minimize the market impact on FTT, Alameda will happily buy it all from you at $22. So this was what was going on. And there was also something very interesting, that there was $583 million worth of FTX token that was transferred on Etherscan. And this article over here explains that it doesn't actually explain what it did, but there again, I mean, that is the big speculation. Again, I wouldn't go fully bearish right now until more information is released. I don't think this is another Celsius, because Celsius, it had to do with a bunch of, also Three Arrows Capital, UST, they were taking their customer monies and locking it up and using it for their own. I think Celsius was a way different scenario, and I think it's much early to compare this, and it's just unfair to FTX because we just don't have enough information. However, it is good to be on lookout, because if this is true and FTX token continues to dump, it could cause Alameda Research to be liquidated. And if this happens, then of course FTX loses a lot of money as well. From the FUD that arises from the situation, we could even go lower in the crypto markets again, because when we lose trust, markets tend to dump a lot, especially what happened after Celsius and Voyager. So that is basically the very recent news that I wanted to cover for you guys. So just be careful, and I'll update you guys if there's any more new information that provides us with more context to the situation. Again, I just literally heard about this news an hour ago, and I wanted to make a quick update video, guys. So thank you so much for watching, and guys, make sure to leave a like and subscribe. Thank you, and I'll see you guys in the next video, hopefully tomorrow. So take care, peace, bye bye.